Now that we have a solid understanding of POI selection, we can start transitioning into entry models. And the first question that we need to ask ourselves is, to floor or not to floor? Do we want to see a first level of respect or not? So there are two types of entries used in Phantom, the confirmation entry and the double confirmation entry. Both entry models will have variations depending on which level of an entry is taken at the extreme or the decisional level. It is straightforward to determine which entry model to use. Determine whether the first level of respect is required to confirm a level. If a floor is required, the entry type to use will be a double confirmation entry. If no floor is required, then the entry type will be a confirmation entry. After selecting an entry model to use, the next step is to determine whether the entry will be at the extreme or the decisional level. So let's talk about double confirmation entries first. A double confirmation entry requires the floor to be held prior to the entry in order to validate that the level that you are looking to trade from is in fact holding. The floor is used primarily in counter order flow and counter trend scenarios when price action is confusing, if who is in control is questionable, or if additional confirmation is required to validate the level or the area. So in simple points, if you're not 100% sure about the level that you're trading from, it is always best to use the first level of respect or a double confirmation entry. The name comes from the fact that the level is confirmed twice prior to entering. The two confirmations can be broken down into clear phases. Phase 1, when price interacts with a higher time frame level of supply or demand, price shifts causing the LPOX prior to interaction to fail and a floor to be created. Phase 2 is the floor holds and breaks the LPOX, creating an entry level at either an extreme or decisional level. Because order flow hasn't been set up or price action isn't clear, these entries are more conservative because they need more confluences to confirm a level to justify an entry. Now let's take a look at examples of double confirmation entries. We'll focus first on double confirmation entries at an extreme level. We'll start with phase 1, zone interaction, and LPOX failure. So what we can see in this example is we have price trading into a higher time frame supply zone. Now, if we are looking for a double confirmation entry, what we first want to see is price interact with this higher time frame level of supply. And in order for a first level of respect to form, we would need to see price trade lower, taking out the last point of demand. When this last point of demand fails, this would establish our first level of respect supply zone. Then we can move on to phase 2, the floor holds and the LPOX fails. Now, when price pulls back into the floor level and holds that was created in phase 1, what we're expecting is that price would then trade lower, causing the last point of demand prior to respecting the floor to fail. If this happens, an order flow shift is confirmed and the area to enter has been created on this zone. As we can see, this forms a supply train and we're trading at the extreme, so we have our POI confluences to have a stronger tradable level of supply. Now let's take a look at an example of a demand zone. What we can see in phase 1, zone interaction and LPOX failure, we can see that price trades into a higher time frame level of demand. What we're now expecting, if we are to have a double confirmation entry, we want to see a floor get established or an order flow shift begin. We need to see price react off of the higher time frame demand level, breaking and causing the last point of supply to fail. When this last point of supply fails, we establish our floor demand level. And when this happens, we can move to phase 2. The floor holds and the LPOX fails. Now that we have our floor level, we wait for price to pull back into that first level of respect demand level, give a reaction and start trading higher. If this floor is going to hold, we are going to see the last point of supply prior to the first level of respect holding fail as well. When this happens, we have the creation of a tradable demand level of our double confirmation zone. As we can see, this creates a demand chain and we are trading from the extreme. So we have strong confluence for this tradable zone. Now let's take a look at an example of a double confirmation entry at a decisional level. So similar example, we have price trading into a higher time frame supply level using phase 1, zone interaction and LPOX failure. What we have is price reacts off of higher time frame supply. We react off of the last point of demand, the initial reaction, the extreme of the reaction leg, and the failure. And what we can see is once the last point of demand fails after interacting with higher time frame supply, we get the establishment of our first level of respect supply level. And we can move on to phase 2, the floor holding and the LPOX failure. Once the last point of demand fails and establishes our first level of respect, we're waiting for price to come back into our first level of respect supply level, interact with it, trade lower, breaking our last point of demand level prior to the first level of respect. And once this last point of demand fails, we now have a tradable zone, which if we look at our POI confluences, we have a supply chain. We have also a supply to demand zone flip on the initial zone, and we're trading that supply chain. We have a high probability confluence zone. Now let's take a look at a bullish example. We can see that price trades into a higher time frame demand level. Now, if we're expecting this higher time frame level of demand to hold, we would expect a reaction that causes the last point of supply to fail. And in this case, we can see that price gives a reaction to that last point of supply, the initial reaction, the extreme of the reaction leg, and the failure of the zone. We can say now that the last point of supply has failed and has formed a first level of respect demand zone. Now we can move on to phase 2, floor holds and LPOX failure. So as we can see, price has now seen a failure of the last point of supply, forming a first level of respect demand level. We wait for price to enter into this first level of respect demand level. We see a reaction, trade higher, causing the last point of supply to fail. Once this last point of supply fails, it confirms the first level of respect demand zone and creates a tradable demand level. And as we can see, we are now creating a demand chain that came from a supply to demand zone flip. So we have the confluences for a strong demand level to trade from. Now let's take a look at confirmation entries. A confirmation entry does not require the first level of respect to be held prior to entry. This entry is mostly used in situations that are pro-order flow and pro-trend, or when price action is clear and control has been set. The name comes from the fact that we are confirming a shift in a higher time frame level to validate an entry. The shift in order flow confirms the higher time frame level of supply or demand and creates an entry level at either an extreme or decisional level. These entries are more aggressive in nature, but because order flow has been established, there are already strong confluences present that require fewer confirmations at the entry level. And similarly to the double confirmation entry, we have our two phases, phase 1, zone interaction and LPOX failure, and phase 2, entry. So for phase 1, we want the zone interaction of the higher time frame level of supply or demand and to see the LPOX failure. Let's take an example of the confirmation entry at an extreme level. So what we can see is similar to the double confirmation entry, we have a higher time frame level of supply that price is trading into. Once price interacts with that higher time frame level of supply, our anticipation is that we'll see a reaction that causes the last point of demand to fail. Once this last point of demand fails, we would create our tradable level of supply that we can look to trade. Move on to phase 2, the entry. The entry is placed on the entry level supply zone at the extreme of the structural range. Because this is a confirmation entry, we already have confirmation that this supply level, this higher time frame supply level should hold, and we're able to trade it without needing that additional level of confirmation. Now look at an example of a confirmation entry at an extreme level of demand. We can see that price trades into a higher time frame level of demand. Price then reacts, causing the last point of supply to fail. When this last point of supply fails, this creates our tradable demand level. Move on to phase 2, the entry. Once that tradable level has been created, seeing the last point of supply fail, an order can be set and we can trade this level of demand at the extreme. Again, this is a confirmation entry. This POI has already been confirmed, or we are trading in a pro order flow, pro trend situation, and we don't need that extra confirmation that a double confirmation entry would provide. Now let's take a look at an example of a confirmation entry at a decisional level. Now in this example, we can see that we have price action trading into a higher time frame level of supply. Price interacts with that level of supply, creates a reaction. We react off of the last point of demand, the initial reaction, the extreme of the reaction leg, and the failure, causing a last point of demand failure. So demand has now failed. This creates our tradable supply level. We can move to phase 2, the entry. Now that we have a tradable supply level and the last point of demand has failed, showcasing that order flow has in fact started to shift, we can trade the supply level, looking to trade short or sell into this supply level. Now we'll look at an example of a confirmation entry at a decisional level of demand. What we can see in this example, we have price trading into a higher time frame level of demand. We see a reaction to that higher time frame level of demand. Price also reacts after the last point of supply with the initial reaction, the extreme of the reaction leg, and the failure of the last point of supply. This failure of the last point of supply creates our tradable zone, which in this case is a flip zone. And one thing I should have mentioned in the previous example for supply, we create a demand to supply flip. But now that we have a supply to demand zone flip, we have our tradable demand zone. The last point of supply has failed. We are anticipating that order flow has indeed shifted, and we can look to trade at this level of demand. Go to phase 2, the entry. Now that the last point of supply has failed, we have our tradable demand level, which is a supply to demand zone flip. We can place our entry on that level of demand and look to trade long. As you can see, the power of the double confirmation and the confirmation entries, the reasons why we use them. Use a double confirmation entry if you're unsure of the POI you're trading from, if you're not entirely sure who is in control, or you just need additional confirmation to validate the level that you are trying to trade. And the confirmation entry is best used in pro-trend, pro-order flow situations where you'd have a strong sense of the direction, who's in control, and are looking to get into a trade.